Hey everyone, welcome back. Today we have a special episode. I'm going to be doing a recap of a trade that was requested by multiple people on Instagram. A lot of people had a short bias here. We ended up taking a long, and people wanted me to explain why I took it. On our data account, you can see we made $1,100 on this trade, as you can see in the screenshot right here. Before we get going, just go ahead and hit that subscribe button. And obviously, we sent the trade to our signals group, our VIP analysis group, and our copy trading clients got this trade copied to their account as well. Okay, so if we're gonna just kind of break this down for what it is, and we're gonna be totally honest, my initial bias was bearish. I expected price to just continue down. You can see our first rhythm here came above the 618 and between the 618 and the 786, which actually puts us here. This was my initial bias. I wanted to sell here. I bought up to it and wanted to sell here. Why I didn't sell, and where I think a lot of people got trapped, is if we actually take a look at what we're reacting to. So, low holds, liquidity gets respected. Low holds, liquidity gets respected. Low holds. What's breaking right now? Highs are breaking. Do we expect these lows to break? No, we don't. So right now, whenever we have a trend to the left and a trend to the right, what I mean by that is we have this, the actual external ranges are here. You would say this is your ranges down. Some of you might call it market structure. What we have here is internal ranges. So essentially you have 3 days of PA where nothing happens. Price impulses, pulls back. While nothing happens, this respects. Finally you get an internal break. And now you have 2 internal ranges. What I like to see is the external ranges continue. However, let's take a look at our liquidity point. By the way, being totally honest with you guys, while we bought up to this, I did sell this, and I did take a hit on this. So my idea was to sell, and my idea was valid. At the time, the reaction obviously went against me. So I want to kind of take a look and show you guys what happened. So there was one sell here. I took a hit on one. This one here I didn't bother taking. I wanted to see what the reaction would do. So what I like to see is the reaction basically happen. And then as the reaction happens, I kind of want to see like ranges away on the 5-minute. We didn't get that. We got this reaction, we took it out. We got this reaction, we took it out. We got this reaction, we took it out. If we look to the left, this is a void. There is no liquidity here. There's nothing left to react to. We've reacted God knows how many times here, maybe 3, 4, 5 times. None of the reactions actually sustained. We didn't take out any lows. So this had me thinking that buys were going to prevail. Now, if we take a look at this, there's nothing left in this range. To me, the next reactive thing is something maybe in this imbalance. So how did we come up with this buy bias? I'm going to show you guys in a second as we break it down. Now, if there's no liquidity left in here, the chances of any of these order blocks or support resistances or whatever you guys use holding is non-existent. So rather than us reversing price action, we're just going to look at how all the lows are holding, and we're going to continue buying. So what we can see here is this reaction came off of nothing. When a reaction comes off of nothing, it generally means we're building liquidity for the move. So this, to me, is a buy order being built. Just so we're a little bit more clear on what price is doing here too, You can see this is our first reaction. Actually, you know what? I'm going to come back to this. We're going to come back to that. I'll show you guys how I use that after. What you can see here is price is just building. We're not breaking any lows. So what we know is this is a fake reaction. Now, we liquidate the highs here. We have a fake reaction off of nothing, and we're inducing people into sells. The sell ideas became invalid somewhere around here. We just kept climbing. There's no reason to sell at this point. Continuations work more often than reversals. So you took out this high. We find the low that took it out. This is the low that took out the high. This is our induced low. So we want to see that low go, and we want to see price ultimately develop price action away from it. So this is our liquidity that we're going to use, or our induced low. Inducement. Well, that's a little bit big. Let's just... let's use, that might work better. Okay, so that's our inducement. That's our point of invalidation. So we can drop down to the 5-minute. Now, by rights, I could have taken this trade a lot sooner than I did, but I was a little more cautious on it. So by rights, we probably could have executed any time here. I ended up basically waiting for this reaction here and waiting for a pullback and a break. Now, if we just read the liquidity here, there's nothing left in here. There's no imbalance. There's no reason for price to revisit this low. So for me, the last low I got to cover is here. And I'll show you guys how this one worked out. So while I wait for this reaction, we get one pullback. And ultimately, you could just put a long entry on this. You can execute when it breaks the high, or you can buy stop it. As soon as this reaction candle gets taken out, the chances of this move coming back is next to none. We do expect a mitigation once the high goes, so I leave my stops open until the very high goes. This is late for me. I don't stay up and watch charts very late, so I kind of stayed up a little later this day. I executed this. I watched price for a bit. I was looking for a second entry. I didn't get one, so I just left my stops open. I set trade manager to, or trade assistant to break even at the high, and then I go to bed. So essentially what happens here is we're planning for price to go somewhere into this imbalance. So now if we go back to our reactions, so this fib gets a bit messy, but this is how I pull projections. It's the first leg that started the reaction. So we can see price kind of shot up, and I can say the closest thing where our reaction came from is around the 1, so I'm going to target the 2. Now the next thing I'll do is I'll either pull the whole range or I'll go and find a 4-hour leg, which ends up being one of the same here. And then generally you get at least a 618 expansion. So what I do now is I look at the 618, I look at the 2, and essentially I'll just kind of find a happy median between it, which is right within the imbalance, but this would be my target. Now this is very conservative. In hindsight, I could have actually targeted this low as there was actually nothing even left in here, but that's a topic to be discussed for another day. So essentially I just go to the middle of it and I go to bed. So you don't want to break even too quick on these, because once this high is broken, there's a very good chance of a retest. And the retest is usually where you can get in if you didn't get this entry. So if we just play this. Now, I'll try to make more recaps for you guys in the near future. This is the one that I've kind of put on Instagram lately. I haven't really made too many recaps lately, but multiple people requested this. As you can see, the retest happens right where we break the high. This is where money switches hands. So in this particular zone here, you have your order transfer zone, and then you have lit. So essentially, order transfer zone would be the last set of sellers was here, and then your lit would be the body that broke through it. And essentially lit runs to the first bearish candle. So you can see we've respected the level. If you wanted to get into this, you could just put a limit on lit. If you want to be safe, I'd cover anything with imbalance. So if you didn't get the entry I got, you could have taken this limit, cover the imbalance candles. There's no imbalance down here. There's no liquidity. There's really no reason for price to revisit any lower than that. But, yeah, you could have taken that. And essentially this just kind of rips the target. By the time I woke up, it was almost at TP. So this is, usually gold gives you 1 or 2 of these trades a week, sometimes 3. It seems to like Asia, as the Chinese market does seem to move it quite a bit since they're heavily invested in gold. So this was the idea for the setup. Now this level I thought would hold. As soon as this level broke through, I kind of knew price was going higher. So yeah, and this is the whole concept of the trade. I hope you guys enjoyed this, and I hope you kind of seen how we put the pieces together. And ultimately, if I can give you one piece of advice, continuations work more often than reversals. Even if it feels wrong and price seems like it's too high, you're more likely to make money buying than you are selling. Same thing when a leg oversold. If it looks like it's too low and you should reverse it and buy, you're actually more likely to make money keep selling. So, finding tops and bottoms is the worst way to trade because you'll lose more often than you win. But yeah, I hope this one made sense to you guys. I'll try to drop another one here within the next week for you guys, show you one of the later trades that we've taken, and we'll keep breaking them down. But yeah, leave us a comment below, guys. If you haven't subscribed, definitely do. And I will see you in the next one.